Right. So yesterday we did a small question, but it is not yet finished. So just we'll finish that question before we continue to the another question. Just look at the same question that we did it on yesterday. Following is the trial balance of the Duminder's retail trading business as at 31st December 2023. So here they have done a trial balance. They have done a trial balance, right? As I said yesterday, so the trial balance is the input for the financial statement. So without having a trial balance, you can't prepare the financial statements, right? So if the examiner is asking a MCQ question, what is the input for the financial statement? Your answer should be it is the trial balance. Right here, all the accounts year end balances has been summarized. You can see here there are description column, account name, debit and credit. So as I said yesterday, debit having the expense and asset, credit having the liability, capital and income account balances, closing balances, right? So we'll read it. So following is the trial balance of the Duminder's retail trading business as at 31st December 2023. Purchases given, sales given, stock 1st Jan 2023 mean opening stock. Carriage inward that has to be added to cost of sale, determine trade receivables. So this is the balance receivable on credit sales, right? Debtors mean balance receivable on credit sales. Creditor mean it's the balance payable on credit purchases, 10% bank loan, paid bank loan on interest. Then so if you see here, the bank loan value is 10,000. A bank loan value is 100,000. So see here, the bank loan value is 100,000. If the interest rate is 10%, if the interest rate is 10%, loan interest for the year should be loan interest for the year should be 100,000 into how much? 10%. 100,000 into 10%. Loan interest for the year should be how much? 10,000. But when you see this trial balance, the interest that has been paid is how much? Interest that has been paid is how much? Only the 6,000. Now you can see interest for the year 10,000, but the interest paid only 6,000 mean there is a unpaid interest expense 10,000, paid interest 6,000, then accrued unpaid loan interest, or we call it accrued loan interest equal 10,000 minus the amount paid 6,000. There is an unpaid amount of how much? 4,000. Unpaid loan interest is equal 4,000. So see this carefully. So we know that accrued expenses, unpaid loan interest, you must classify as a liability, right? So this is a liability. This will be a current liability. It's a liability, unpaid loan interest, right? Very important. So again, if I explain this adjustment, 10% bank loan 100,000 means, so the loan interest for the year 100,000 into 10% is 10,000. But the question trial balance said paid loan interest is only 6,000. That says us there is unpaid balance of how much? 4,000. This is not yet paid. Accrued loan interest. Accrued loan interest is for us, what is it? Current liability, right? Very important. Naveen, put the best effort to understand. Anything you need, just ask me to clarify. Then distribution vehicle, it's a fixed asset. Provision for distribution vehicle depreciation, this is opening balance. See, opening balance, it's date given 40,000. Then furniture and equipment again, 120,000, it's a cost. Electricity expense, advertisement expense, cash balance, capital. Then additional information, stock as of 31st December 2023, 88,000. These are adjustments. These are adjustments in addition to the trial balance. They have given some adjustments. From here to here, those will be the adjustments. right? From here to here, those will be the adjustments, right? Additional information. These are adjustments. Stock balance is given. Distribution vehicles 5%, furniture equipment by 10% are depreciated annually on a straight line basis. Now see, they're asking you to calculate the depreciation. How they are asking you to calculate? Distribution vehicle by 5%. So this is the distribution vehicle depreciation calculation. Just look at it. Cost of the distribution vehicle is 400,000. 400,000 into 5%, you get the distribution vehicle depreciation. 400,000 into 5% is 20,000. Then they're asking you to calculate again furniture and equipment depreciation, it's 10%. So cost of the furniture and equipment is 120,000. 120,000 into 10%, that is came 12,000. Both depreciation are expense. So this is distribution vehicle mean you must record under the sales and distribution. See here, I have record distribution vehicle depreciation 20,000. Then furniture and equipment depreciation is administration. Here administration, under the administration furniture depreciation, it's 12,000 I have recorded. When the asset is getting depreciated, the value of the asset come down. Therefore, you must deduct it from the non-current assets. Right? See here, distribution vehicle cost is 400,000 was given us. Then the furniture, the cost is given 120. Then accumulated depreciation, we have to take it to here. Accumulated depreciation mean the total. Accumulated depreciation mean total depreciation. So the opening balance we have here, provision for distribution vehicle 40,000 plus charge for the year 20,000, altogether depreciation will be 60,000. Here the total accumulated depreciation is 60,000. Then cost minus accumulated depreciation, you get the net book value here, that is 340,000. Same as the distribution vehicle, you need to write the furniture cost here. Accumulated mean the total. The word accumulated mean total, right? Total depreciation is, so the given furniture depreciation here, how much? No depreciation, they have given opening balance, then only the charge for the year will record. No opening balance, no opening balance, then the 12,000 only charge for the year will be recorded. Then the net book value after the accumulated depreciation is 120,000 minus 12,000 is 108,000. Then you can get the total here. Total here, that's 448,000. We have done the adjustment number 2 and we have done the adjustment number 1 as well. So how much the opening stock, closing stock, right? How much the closing stock they have given? So here closing stock is 88,000. That is here closing stocks 88,000. And you must take that closing stock for the current assets. It's an asset. Right here under the asset we will write current asset stock 88,000. Remember that all the adjustments here, adjustments we are recording in two places. And the balances in the trial balance will only record in one place. So we'll see the rest from the trial balance. Purchases 380,000 we have done it. Then the sales 550,000 we have done it. Then the stock opening balance 80,000 we have done it. Carriage invert 10,000, you have to add it, carriage invert 10,000 here. Carriage invert 10,000. Debtors is a asset. It's a current assets. Here debtors current assets. Debtors, how much the value? 190,000. Debtors 190,000. Then Creditors 244,000. Current liability. Creditors, it's a liability. Creditors here, it's 244,000. Creditors 244,000. Then next one, bank loan. Bank loan is a liability again to statement of financial position. To the non-current liability, the loan value is how much? 100,000. Bank loan 100,000. Then loan interest paid. Now see here, the loan interest for the year came 10,000. So then under the finance and other expense, loan interest you should record. Loan interest you should record here 10,000. Why? The interest for the year is 10,000, but they have paid only how much? 6,000. So 100,000 into 10% is 10,000. They have paid only the 6,000, mean there is unpaid interest of 4,000. That is a liability, current liability. Accrued loan interest. How does it came? 10,000 minus the 6,000 paid amount. Right? 10,000 is the loan interest for the year. Paid only 6,000. There is an unpaid balance of 4,000, will be a current liability. Will be a current liability. Then it's done. Next, distribution vehicle, we have done it. Provision for depreciation, we did it. Furniture and equipment, we did it. Electricity is an administration here. Electricity is an administration expense. 60,000. Electricity is 60,000. Then advertisement 44,000, selling and distribution. Advertisement 44,000. Advertisement 44,000. Then cash balance is current assets. It's here. Current assets, cash in hand. So current asset 44,000. Cash balance 44,000. Then capital 400,000. It's statement of financial position. Opening balance 400,000. Capital balance is 400,000. Right, we record everything. It's done. Naveen, anything is there to clarify from your side?
No, sir.
Very good. So we'll take the totals. Right, start from the income statement. Here, once you add 80 plus 380 plus 10, the answer is 470. Then 470,000 minus 88, you get 382. Through 382. So the gross profit is sales minus cost of sales is 168,000. See here, very easy. If the examiner is asking how do you calculate the gross profit, the answer should be sales or net sales. You can say net sales minus cost of sales. Right? Net sales minus cost of sale. How do you calculate the net sales? Sales minus sales return is the net sales. Here we don't have the sales return. Then the net sales also 550,000. Net sales also 550,000. Right? Then gross profit done. We don't have other income. We'll take the administration expense total to the other line. So these expenses has to be deducted. These expenses has to be deducted. So 116,000. Then distribution vehicle of distribution vehicle depreciation is 20,000. Then loan interest came only the 10,000. Sorry, I have done a mistake here. So advertisement is not a administration expense. You should record under the sales and distribution. Very sorry. I have done a mistake here. Really sorry. So here, advertisement in sales and distribution expense are or a admin expense. So then here the total is 64,000. Then finance expense is 10,000. Then you can calculate the profit for the period here. 168,000 minus 72,000 minus 64,000 minus 10,000 is net profit came 22,000. If examiner is asking you to calculate the net profit formula, how do you say? Gross profit plus other income minus three expenses. What are the three expenses? Administration and establishment expense, sales and distribution expense, finance and other expense. So these are the this is the way that you calculate net profit for the period, right? That net profit, this is a sole proprietorship business having one owner, Duminder. That net profit will be added to the capital of the owner here, will be added here 22,000, will be added here 22,000. Then we can balance this statement of financial position, right? We'll see whether it's balancing. Total assets equal capital plus liability. Total assets came 770, and here no drawings, no drawings. Yeah, 770,000. The question properly balanced. Question properly balanced. Now, again, just a summary. So, this income statement or the profit or loss account shows you the profit for the period, net profit for the period. In your case, related to a proprietorship, how much the profit that we have earned for the period, right? So here to calculate the profit for the period, you must prepare the profit and loss account or the statement. Here, how do you take? You take only the income and expenses, right? So here you first identify the gross profit, then add the other income, deduct all three categories of expense. Then your answer is net profit. Then that net profit will be added to the capital of the owner. Profit for the period will be added here, right? Will be added here, right? So because it's a proprietary, if any drawings are given, you must deduct here. Here the formula is assets equal capital plus liabilities. Assets we have classified into two groups: non-current assets, basically the fixed assets. The other one is the current assets. Then again the liability we have classified into two groups: non-current liability and the current liability. So we have done it. Then we'll do one more paper. Naveen, anything there to clarify?
No, sir.
Very good. So the paper we did 2023, we will see 2022 paper. Right. This is the biggest question that will be tested in your paper. Remember, so these are not actually hard. Put a little effort on to practice the question. Put a little effort to practice the question. Any questions you are having on this, you can talk to me. You can talk to me. My number is there. Take my number and talk to me. Then I will definitely help you to get through the examination. Right. So we will do today 3rd September 2025. 2022 O level question 7-3. Right, see this. Following is the trial balance of the Sonali's retail business as at 31st December 2022. So again, they have done a trial balance. So it's prepared as at 31st December 2022. So debit, we know that we have assets and expense. Credit, we have other three. Purchases, sales, furniture and equipment. So here you might have to do calculate the furniture and equipment depreciation for the year. Then the stock start given 8% bank loan, electricity charges, carriage inward, depreciation, distribution expense, building rent, bank charges, then the debtors, creditor, cash balance, bank overdraft, right? Paid overdraft interest. So just we'll see what are these items. Purchases is what? Purchases is expense. I will put here, then it's easy for you know. Purchases is an expense to income statement. Sales again income to income statement. Furniture and equipment is as fixed assets to statement of financial position. Stock we will take to income statement as opening balance income statement. So then 8% bank loan is a liability. Electricity is an again expense administration. Then carriage inward expense to profit and loss. Distribution expense, building rent expense, administration. Then bank charges again expense. Then debtors assets, creditors liability, cash balance asset, bank overdraft liability, paid bank overdraft interest expense, advertisement expense, machines fixed assets, capital is anyway capital. So now I have classified, then it's easy for you to identify where to write it. Very easy, right? So this classification is very important. So again, two adjustments are given. Stock as at 31st December 2022 mean closing date stock is 48,000. Machine should be depreciated 10% annually on straight line basis. We'll calculate here machine depreciation equal how much? Cost of the machine is 200,000. You can see here the machinery cost here 200,000 into they're asking you to do the 10%. So 200,000 into 10% is 20,000. Machinery depreciation is 20,000. So machinery depreciation is admin expense. Admin expense. Then electricity charge to be paid. To be paid mean unpaid. That is a current liability. To be paid, accrued expenses to be paid as at 31st December 2022 is 2000. It's a current liability. It's a current liability. Accrued expenses. This is a current liability. Accrued expenses. It's a current liability. Right? They're asking you to prepare profit and loss and the financial position. For my easy purpose, what I'll do, I'll copy the both formats and it's easy for me. So name of the business, Sonali's business. Profit and loss account statement. Profit and loss statement for the year ended 31st December 2022. The same format you can apply here. I will clear the numbers. Clear the numbers. Oh, macam? ආයාවද? Right, here Sonal's business statement of financial position as at 31st March 2022. Right, we'll clear and put the numbers. Right. We'll start from the adjustments. Stock as at 31st December 2022 is 48,000. This is taken for the cost of sale calculation here, minus 48,000, and under the current assets stocks, right? 48,000. As I said earlier, you must record the adjustments in two places. Adjustments in two places. So here the closing stock is an adjustment. You will take that is for the cost of sale calculation in one place. The other place is the stock is an asset for us. So that is a current asset. Done. Machine should be depreciated 10% annually on straight line method. So we have done the machine depreciation calculation. So machine depreciation calculation came as 20,000. So 20,000 it is administration here, machine depreciation. Machine depreciation, it's 20,000. 20,000. Then the machine is a cost, it's an asset. You must write under the non-current assets, machine. Cost of the machine is how much here? Cost of the machine 200,000. Then accumulated depreciation, as I said earlier, accumulated mean the total. Total mean opening balance plus the charge for the year. Have they given any opening balance of the depreciation? See, in the trial balance, have they given us any opening balance accumulated depreciation? No, no opening depreciation they have given us. Then total charge for the year will be accumulated depreciation here minus 20,000. Then the net book value is 180,000. Cost minus accumulated depreciation. Here, no opening accumulated depreciation. No opening accumulated depreciation mean only the charge for the year will be an expense. Only the charge for the year will be the accumulated. Here charge for the year came 20,000. That you put here 20,000. Then the net book value is 180,000. Adjustment number 1, did it 2, did it number 3. Electricity charges to be paid 31st December 2022 2000. To be paid mean current liability. Accrued electricity to be paid mean accrued electricity is 2000. Accrued electricity is 2000. So how much we have paid? So this is the current liability. Just check on the trial balance how much we have paid. Now see, the paid amount 12,000. Electricity charges that is given on the trial balance as a paid amount is 12,000. Unpaid amount is 2,000. Then the total expense paid amount 12,000, unpaid amount 2,000, total expense to the income statement will be 14,000. Under the admin you can say electricity equal 12,000 plus 2,000. Here the total comes to 14,000. Right? So just look at it. Electricity charges 12,000, unpaid amount 2,000. Altogether, the electricity expense is how much? 14,000. Right? 14,000. Unpaid amount we have recorded under the current liability, accrued electricity. It's done. Adjustments done. All three adjustments we have done. അതിരിയാണ്. So all the three adjustments we have done. So will come from the trial balance. Purchases 360. It's here. Purchases 360. It's here. How much? 360,000. Just copy the numbers from trial balance. 360,000. Then sales 538,000. It's to here. Sales 538,000. Then Purchases done, sales done. Furniture and equipment, again fixed asset 180,000. Here, furniture and equipment, cost 180,000. No accumulated depreciation. Net book value is 180,000. Stock opening 80,000 to income statement. Here opening stocks 80,000. Opening stocks 80,000. 8% bank loan. 8% bank loan 100,000. It's non-current liability. So here 8% bank loan. 8% bank loan came 100,000. Here students just want to see whether what about the interest. 8% bank loan, have they given us the interest? Bank loan interest. Now see, they haven't given the bank loan interest, but it's an expense, right? So we have to calculate the bank loan interest, that is 100,000 into 8% bank loan interest equal 100,000 into 8% is 8,000. So this is finance and other expense. Here loan interest 8,000. Just check with the trial balance how much they have paid. Just cross check. Trial balance, have they given anything related to bank loan interest? No, they haven't given anything. Very important. They haven't given anything related to bank loan interest. That means total is unpaid. Accrued current liability, accrued bank loan interest, accrued bank loan interest. How much is it? Accrued bank loan interest came 8,000. They haven't paid anything. Total is a liability. Very important. It's done. Then electricity 12,000. It's to administration. We have did it. We have done it. Carriage inward 18,000 to income statement here. 18,000. Then distribution 6,000. Sales and distribution. Distribution expense here. Distribution expense 6,000. Distribution expense 6,000. Building rent 20,000 to admin. Building rent 20,000 to admin. Then bank charges fine 2,200 finance and other. Bank charges 2,200. Bank charges 2,200. Then debtors current assets 70,000 to statement of financial position. Debtors 70,000. Here debtors. Then creditors 50,000 current liability. Here creditors current liability. How much? 50,000. Creditors 50,000. Cash balance 45,000. It's current asset. Cash in hand 40,000. Cash in hand 40,000. No, cash balance is 45. Very sorry. 45,000. Cash in hand 45,000. Bank overdraft current liability 12,000. It's here. Bank overdraft 12,000 current liability. Paid overdraft interest 500. It's expense here. OD interest. Finance expense 500. OD interest 500. Advertisement 6,300. Sales and distribution. Advertisements. Advertisement expense 6,300. Then machines done. Capital 300,000. Capital here 300,000. Right. Question, we have taken everything. We'll see whether it's balancing. Sales taken here. Cost of sale taken. Then the gross profit is done. So here sales and distribution expense done. Finance and other total comes to 10,700. Then the net profit is 51,000. Will be added to capital 51,000. 51,000 will be added to capital. Then here the total is 400, 523. The question balance at 523,000. Not hard, right? Students, before you go to the exam, try to practice more papers. The success behind the best results is to practice more papers, right? Not just reading theories, not just memorize everything. So the best way is to pass and get more results is to practice more past papers, right? So minimum you must practice 5 year past papers, 5 year past papers. So the question we did it 2022, right? It's balancing. We'll go for one more paper. 7-3. Again 2021. Question number 7-3. So the session going to finish it. So we'll start with a new session. Right, we'll start 2021 paper. The trial balance of the Nirmala's business as of 31st December 2021 is as follows. Sales, purchase, land and building and cost. So sales to income statement, purchases to income statement, land and building is to statement of financial position. Motor vehicle against to statement of financial position. Creditor, debtor, creditor, building rent, discount received is an other income. Discount received other income. Discount allowed is an expense. Salesperson salary, sales and distribution expense. Bank charges finance and other expense. Electricity charges administration. Again 10% bank loan is given. They are silent about the interest. Better you calculate and take it. So here loan interest for the year. Loan interest for the year equal 100,000 into 10%. So equal 10,000. This is the Finance and other expense. Finance and other expense. See whether that has been paid. Loan interest, they are silent. That means it's not paid. The other place is current liability, accrued expenses, accrued expense. They haven't paid the loan interest 10%, that means 10,000 they haven't paid, it become a current liability, right? Then capital opening balance, carriage inward, stock opening balance, then the cash balance. Other information. So remaining cost of stock 31st December 2021, 20,000, that is closing stock you must take for the cost of sale calculation and to current assets. Then accrued billing rent 2000 as at 31st December 2021. Accrued mean you haven't paid. Accrued mean you haven't paid. It's a current liability. Accrued is current liability. Motor vehicle should be depreciated 20% per annum on straight line basis. They're asking you to calculate the depreciation on motor vehicle. We'll calculate it. Motor vehicle depreciation. Motor vehicle depreciation equal how much the cost of the motor vehicle? See here. Cost of the motor vehicle is 600,000 into the rate is 20%. So 600 into 20% is 120,000. This is depreciation is sales and distribution expense. Motor vehicle. Sales and distribution expense. Motor vehicle depreciation. So they're asking you to prepare with the 12 marks, right? So statement of profit or loss, and the other one is financial position. For my easy purpose, same as previous, I'll copy this one. Then it's easy, no? I'll copy here. Right, we'll do the changes. Nirmala's business. Nirmala's business. Profit and loss statement for the year ended 31st December 2021. We'll clear the numbers. Statement of financial position as at 31st March 2021. So here the values will clear. Now done. So we'll do the question. Right, first one. Start from the adjustments. Remaining cost of stock as at 31st December 2021, 20,000 that need for the cost of sale calculation here. For cost of sale calculation, you take the 20,000. The other one, current assets. Here, stocks. Stocks, current assets, 20,000. Done. All the adjustments, as I said earlier, remember, taken to two places. Then the second adjustment, accrued building rent 2000 as at 31st December 2021. Accrued mean unpaid. It's a liability, current liability. Accrued building rent. Here, accrued building rent. It's 2000. Accrued building rent 2000. How much the building rent you have paid? Paid only 18,000. Unpaid 2,000. Altogether building rent will be how much? 20,000. Admin. Building rent equal 18,000 plus 2,000 unpaid. Altogether here 20,000. Very important. right? So see here again, paid amount 18,000, unpaid amount 2,000, total of the building rent will be the 20,000, that is administration expenses. Right, done. Third one, motor vehicles should be depreciated 20% per annum on straight line basis. So we did the depreciation calculation. So 600,000 is the motor vehicle cost. 600,000 into 20% is 120,000, that is to add sales and distribution. Motor vehicle depreciation. Motor vehicle depreciation came 120,000. Then go to the statement of financial position, non-current assets, motor vehicle. The cost of the motor vehicle is 600,000. Then accumulated depreciation is opening depreciation plus charge per year. How much the opening? Motor vehicle opening depreciation they haven't given, that is means zero. Charge for the year only came how much? 120,000. So here minus 120,000, you get the net book value 480,000. If you have opening balance, you must add and put here. Accumulated mean charge for the year plus the opening balance. Accumulated mean charge for the year plus the opening balance. Right? In this question, they haven't given you the opening balance. Then the accumulated will be the charge for the year. Very important. It's done. Then the next adjustments is, that's all the adjustments come from the trial balance. Will come from the trial balance. Sales 800,000, it's to here income statement. Sales 800,000. Purchases 375,000. It's here 375,000. Then land and building 500,000. It's here land and building 500,000. Land and building 500,000. Then what else? Motor vehicles done. Debtors 9,000, current assets. Debtors to the current assets 9,000. Then creditors current liability 15,000. Creditors current liability 15,000. Building rent done. Discount received 5,000, other income. It's a received. Discount received, it's here. Discount received 5,000. Then discount allowed 2,000, sales and distribution. Discounts allowed. Discounts allowed 2,000. Discount allowed 2,000. Then salesperson salary, sales and distribution. Salesperson salary, salesperson salary. It's 8,000. Salesperson salary 8,000. Bank charges, finance and other. Bank charges. Bank charges 1,500. Then electricity 2,500, administration Electricity 2500. Then 10% bank loan non-current liability. 10% bank loan, it's 100,000. 10% bank loan 100,000, and we have taken the interest, finance expense 10,000. Loan interest 10,000. It has not been paid, so the adjustments we learned here. Loan is 100,000, rate of interest is 10%, so then the loan interest for the year is 10,000. Once you multiply 100,000 by 10%, loan interest for the year coming 10,000. So that has not been paid. It's become a current liability. Here, accrued bank loan interest. Accrued bank loan interest 10,000. Right? It's done. Then capital opening balance to statement of financial position 624,000. Here capital 624,000. Done. Then carriage inward, it's here 10,000. Stock opening balance 15,000 to income statement. Opening balance stocks. Cash balance current assets. Cash in hand 3,000. Then the question we have done it. We'll see whether it's balancing. Here total taken. Here total taken. The cost of sale is 420. Then we have other income here. Here, profit for the year comes to 261,000 added to capital. Added to capital. Then the question is balancing at 1,012,000. So easy. Done. Right, Naveen, is anything is there to clarify from this question? Naveen, just talk to me.
No, sir. No.
Very good. Right, anyway, I'll be uploading this session also to the YouTube, my channel. You can see from there this the same. If need, you can repeat it and watch. Then you can easily clarify the things. So we'll go to another paper.
Okay, sir.
I think I haven't done 2024 paper, no? Yeah, we haven't done. So we'll do the 2024 paper. Just read the question. I'll come with the water. Just give me a minute.
Can you start the recording?
Sorry?
Recording?
Ah, yes, I have started it
Yeah.
now.
Okay.
So the loan interest is 4,000, 50,000 of the 8% is 4,000. If you see here, how much the interest paid, only paid amount is how much here? 2,000. Loan interest for the year is 4,000, but the paid amount is 2,000, mean unpaid loan interest. See here, unpaid loan interest, or we call it accrued loan interest equal how much? 4,000 is the interest. We have paid only 2,000. Then unpaid amount is how much? 2,000. Current liability. Unpaid accrued loan interest will be 2,000. That is to current liability. Right, done. Then bank charges 1,500. Machine and equipment first opening balance. Cash balance done. The trial balance is balancing. They have given us again three adjustments. Stock closing balance 6,000. Not hard. Monthly building rent. Now see, they have given you monthly building rent to confuse you. If the monthly building rent is 1,000, rent for the year should be how much? If the rent for the month is 1,000, building rent for the year, building rent for the year should be 1,000 into 12. That means 12,000. If you cross check how much the building rent they have paid in the trial balance, just look at it. Building rent they have paid only how much? 10,000. See here, building rent 12,000 is the rent for the year, but they have paid only how much? Again, see, 10,000. Building rent for the year 12,000, paid only 10,000, unpaid. Unpaid or accrued. Building accrued mean unpaid. Accrued building rent equal 12,000 minus the paid amount 10,000 equal 2,000. Very important, right? Building rent is 12,000. They has only paid the 10,000. That means unpaid rent is there. Unpaid is 2,000. You must record that as a current liability. Then distribution vehicle should be depreciated annually 8% on straight line basis. Easy one. We have done lot. So here you must calculate the depreciation for the year for what? Distribution vehicle. Depreciation equal how much the cost of the distribution vehicle. Distribution vehicle 400,000. So 400,000 into 8% equal 32,000. This is the distribution vehicle, that is to sales and administration, sales and distribution expense, and the accumulated depreciation calculation. So it's done. We'll have the formats for my easy purpose. I'll copy the same. We'll clear the numbers. Name of the business is Saradas. Saradas business profit and loss statement for the year ended 31st December 2024. Sarada's business statement of financial position 31st March, not 31st March, 31st December 2024. In the previous question, I have taken December or March. Sorry, I have done a mistake here. 31st March should be December. Here also 31st December. Right. We'll start with the adjustments. Right. Easy adjustment. Stock 31st December 2024, 60,000. We'll record here for cost of sale calculation. It's minus 60,000 and current assets. Stock 60,000. Done. Second one. Monthly building rent is 1,000. If the monthly building rent is 1,000, rent for the year should be 1,000 into 12 under the administration building. Building rent that is 1,000 into 12. 12,000. Right? Then they have paid only here 10,000. There is a unpaid building rent 2,000. That's a current liability. Here accrued building rent, it came 12,000 minus 10,000 is 2,000. Building rent 2,000 accrued current liability. Then done. Third one, so distribution vehicle should be depreciated annually 8% on straight line basis. Then under the sales and distribution expense, distribution vehicle depreciation, how do we calculate? Cost into 8%. 400,000 into 8%, easy. Then the depreciation came 32,000, right? Then in the statement of financial position, non-current assets, distribution vehicle, cost is 400,000. Accumulated depreciation mean charge for the year plus opening balance. We have already learned it. So charge for the year came 32,000 plus the opening balance. See here, you have an opening balance of 64,000. Accumulated mean 32,000 plus 64,000. Right, so 32,000 plus 64,000 altogether 96,000. That is the accumulated depreciation that has to be deducted. Net book value is 304. I'll show you the calculation here. It came 32,000 plus 64,000. Right, 32,000 plus 64,000. It's done. Then adjustments done. Then will come from the beginning of the trial balance. Capital 455,000. It's to statement of financial position 455,000. Then stock opening 58,000. It's here 58,000. Then 8% bank loan 50,000 non-current liability. 8% bank loan. 8% bank loan 50,000. Then we did here the interest also. Loan interest came how much? Loan interest came 4,000. Finance expense. Loan interest. 50,000 into 50,000 into 8% is 4,000. Here you haven't paid that one. Only you have paid the 2,000. There is unpaid 2,000 accrued current liability. Accrued bank loan interest came 4,000 minus 2,000. Value here 2,000. Done. Then bank loan done. Debtors 45,000. Current assets. Debtors 45,000. Current assets. Then creditors 51,000. Current liability. 5,000 current liability. No, 51,000. Then purchases 375. It's to here. 375. Sales 590. Sales 590. Carriage inward 22,000. Carriage inward 22,000. Building rent done. Sales employee wages 90,000. Sales salary 90,000. Electricity 50,000 admin. Electricity 50,000. Then discount allowed 12,000. Discount allowed 12,000. Discount received other income 15,000. 15,000. Distribution vehicle taken. Provision for depreciation taken. Loan interest taken. Bank charges 1,500. Bank charges 1,500. Machines and equipment 150,000 fixed assets. Machines and equipments 150,000. Cash balance 9,500. Current assets. Cash in hand 9,500. Done. Question done. So we'll see whether it's balancing. Net profit came 8,500 will be added to the capital. Right, yes, it's balancing. Done. Naveen, anything to clarify?
No, sir.
Right, very good. We'll do 2020 paper. Right, we'll stop this session and start a new version. It's easy, no? Stop recording.